Good morning, everyone, and welcome to the weekly technical video. Guys, as everyone knows, the U.S. has been downgraded by S&P over the weekend, and there is a lot of panic and a lot of scare around the market. I want all you guys to be relaxed and don't believe in. Like I always say, guys, every news is important in the way that the news is like a catalyst that makes the move, but I've seen it many times, the move not doing what it is supposed to be doing. So with that in mind, I would like to let you know, guys, my point of view and why I believe that we are in the right side of the market, being on the euro dollar short side. I mean, I hope that pre-market makes the move that we're still missing in the euro dollar, and then before it gets back. Now I'm going to explain to you guys the reason why we feel that way. Also, I would like to let you know that at the end, all you guys know that we are dollar bearish. So we knew about 2 weeks ago or 2 months ago that the dollar is going to get weak over time, right? So let's start with the US dollar index. On the US dollar index, guys, all we know that from the 73.30 low, which is right here, this is a corrective move. There is no way to call this a bullish move. All right. So what we are expecting, we're gonna keep the same counts that we haven't. I think that this count is very solid, and being this the end of the correction, and then being this nothing more than the wave 1 or wave 5. Now from here, what we are expecting, a corrective move. That's what we've been calling since last week. If you guys remember, we are expecting a corrective move that is gonna be to around 75. We will mention 3 levels at the beginning: 75, 75, 45, or 76 area, with an extension close to the 77 area. Now, like I say, in Forex, don't let the news put noise on your head. Nothing. I mean, we all, me, James, and everyone that is a client on us, we believe in the Elliott Wave. That's why you guys are members of our service. We believe in Elliott Waves. And in Elliott Wave, this is a 4-hour chart on the US dollar index, and it shows 1, 2, 3, 4, 5, 6 way. So technically speaking, if you take this 6 way out, there is 1, 2, 3, 4, 5 ways into here. There is no correction in 5 ways. No correction in 5 ways. So with that in mind, I would say the truth. At this moment, you have to be more bullish dollar than the bearish dollar. Why? Because knowing Elliott Waves and knowing how the market reacts, if the market goes or start buying the dollar due to risk aversion, I know pretty sure that I'm going to label this as a wave 1 and a flat wave 2 here, and then this being a nest, which is going to favor a move on the dollar. I'm pretty sure that I'm going to do that, even though I said 2 minutes ago that there is no correct way to label it as a bullish count. But why no? 1, a flat 2, and then the bullish, the nest to the upside. That's if that's the case. But we still believe that this is corrective. We still believe that this is corrective, and we believe that no matter what happens around this area, from here you got 1, 2, 3, 4, 5, 6 way. You need a 7 way. That's the trick, guys. As simple as that. That's the trick. Nothing more than that. So what we're expecting is possible in an open. We're expecting maybe a lower dollar. We're expecting a lower dollar to either 74.22 or maybe going higher from current levels. Now we're expecting that, and then After that, we're expecting a rebound in the dollar, right? We're expecting a rebound in the dollar. So that's about the dollar. At the end, we believe that the dollar is gonna get weak, but I see 1, 2, 3, 4, 5 ways. So technically speaking, we should get a 6 and a 7. Technically speaking, we should get a 6 and a 7. So let's move on now to oil. And we're gonna be covering oil in the daily basis, on the weekly basis. Let me put the weekly first, I'm sorry. On the weekly, we all know that this is a 5-way move, and we know that oil should trade higher. Now, like I say, at this stage, I remember we were very bearish on oil, and we were calling that oil is gonna trade lower to below the lows that he did in 2009. We was around $33. It should trade lower. That's what we believe, that it should trade lower to around that low. Now, the way it's structured, to tell you the truth, the way it's structured from here, I mean, it's not very bearish. It's more a bullish consolidation than other things. But you never say never. And I see this break or this channel in oil, which it makes me to believe that we need to find a way, in some degrees, to a bearish oil. We are still laboring like this, WSABC, with a move that we are expecting to 127 as still possible to happen. When we got A, we got a flat B, and we are on the C. This is on the weekly chart. When the C is going to be equal to the around the 79 area, which is also the area when the 76 for comes around 76, 78 area. Out of that area, guys, you need to start selling the oil, and oil is gonna go to around $20 a barrel. Right? That's oil. Now, if you take a look at oil in the short time frame, this is what I was mentioning to you guys. A, and then A, B, C in a flat, and I thought a little bit the issue right here when we got 1, 2, 3, a flat wave 4, and then we got 1, 2, 3, 4, 5 on wave 5, and then from there we got 1, 2, 1, 2. I think that we finished 3, 4, and that goes pretty well with the cat. The cat is in the same structure. Aussie, all those metals pairs, they are in the same structure right there. All right, so let's move on to the individual pairs pretty fast. Okay, guys, and the individual pairs, we're gonna cover now the euro dollar. The euro dollar, guys, very easy, very simple. We got a possible WSY structure ended here, most likely. We got what we can call like a 1, 2, 3, 4, 5 right here, and then we got how many ways? 1, 2, 3, 4, 5. We need a 6 and we need a 7 at least. It looks like this is taking the form of a flag, and for that, let's move on to the 1 hour chart on the euro dollar. And we're gonna take a look at the same structure from 45.34. What you got, guys? Let me put it very simple right here. Let me put the RSI, and you guys gonna see when I come from. RSI first move from here to here, you got divergence on the RSI. Second move, and then you got 3 ways back. Then second move from here to here, you got divergence on the RSI. All right. So now, what you got? You got 3 waves back. This move right here did not provide divergence. I remember on Thursday sending a count late Thursday saying that we need one more low. Well, that never happened, which makes this move a 3-way move together with this move a 3-way move. So technically what you have a 5, a 3, a 5, a 3, a 3. So you need a 5 to the upside. You need 5 ways to complete a flat. This structure, in my view, cannot be ended or cannot be completed. Why? Because you got 1, 2, 3, 4, 5 ways move. And even though at the end of the day, like it is, if it goes higher, we're gonna force it and we're gonna say A, B, C, W, S, A, B, C, but this is not a 5. So there is no way to force it because this is not a 5 unless you say A, B, C, W, S, A, B, C, W. But if we take a look at the fever relationship, I mean, they are not even equal. So technically speaking, I don't think that that's the case. Technically speaking, I believe that this is a flat that we need one more high before going lower. Even if we take a look on the 15-minute chart, and I'm doing it on purpose so you guys see the laboring. Look at this, guys. This is what matters the most right here. You got 3, you got 3. Look at the RSI, low, low, high, high. And then in this move, you got 1, 2, 3, 4, and a 5. When the 5 provide divergence, telling me that this move is a 5-way move. So with that in mind, I would say that the correct count is the one that we're presenting here, and the correct count is the one that we're presenting here, and we are correcting this move from 145.35 to 141.48. We are correcting it in a 3-way flat when you got A, B, C, A, B, C, B, and then you got 1, 2, 3. We're gonna count a 4, and we're gonna count a 5. That's what really guys really believe that is taking place on the euro. Now pretty fast, because I don't want to get too deep in this video due to the fact that we have the seminar today. If you take a look at the dollar CAD, it's a well-defined structure that is incomplete when you got 1, 2, 1, 2, and then it looks like it needs to go higher to finish the wave. It needs to go higher to finish the 3, the 4, and the 5. So that's what we need also on the euro. Another one that is incomplete is the Aussie dollar, which it looks like we got 1, 2, 1, 2, 3, 4, and then we finish wave 3 right here with possible a move higher in Aussie dollar, and move higher to around 106, 105 and change before dropping in the wave 5. And finally, let's take a look at the S&P. On the 4 hour on the S&P, we believe that we are still in wave 3. That wave 3 should end around 11:45 before going in the 4 and more decline. So at this stage, guys, we see in the S&P 2 scenarios: either a top like it is presented here in an ending diagonal, or a possible wave B, humongous flat that is going to take it a little bit higher like oil. But we need to be checking this very careful, guys. All right, so let's leave it there. I'll see you guys later on the seminar. Thanks.